Hi there, my name's Dr. Scott Ellis, and in today's presentation I'm going to talk about the concept of FinTech and the challenges the sector faces moving forwards. In this short presentation, I'm going to explain the evolution of FinTech, how it has changed the banking landscape in the context of the United Kingdom, and then talk about the challenges that FinTech providers face, and also from a regulatory point of view. But one underpinning concept of this is a quote here by Sabi Gill, the chief executive of Sage, last year at a presentation. He said something like 70% of jobs in the finance sector do not exist yet. So take a moment to think of the consequences of that on the sector as a whole and future employees of this sector, and what kind of skills and attributes they need right now to overcome some of these challenges the sector already faces today. So, where did FinTech come from? Well, there's a paper on the evolution of FinTech that was wrote in 2015, which talked about 3.5 stages going on 4 of how FinTech has developed. And they even go back to 1866 with the development of the pantelegram, which was a contraption they used to verify signatures that could be sent across the ocean by using wires and tracing of this instrument. And that went up to 1967 with the Telmax system for banking receipts. And then FinTech 2.0 took over, and this was really the kind of digitalization and globalization phase of the Western economies, which went from the development of the internet up until the financial crisis of 2008. And this is where we've seen a lot of financial technology being used and utilized within the banking sector. And the early stages of this was the ATM, all the way up to the use of banking apps. And currently, we are in FinTech 3.0, and this is post-financial crisis, and the stage where a range of new providers started appearing due to the negative consequences of the financial crisis in 2008. So this is where new providers appeared to take in their experience of using technology into the finance sector and really looking to capitalize on some of the reputational damage to some of the banks in order to gain customers. But also, there was an unintended consequence of regulation post the financial crisis. And this is where regulators forced some of the banks to hold extra capital. And due to this meant that they couldn't lend to small and medium-sized firms. And this is where these new providers, or the FinTech providers, kind of capitalized. As firms were looking to raise new capital, they couldn't go to the banking system, so they went to the FinTech providers. And you may have seen in the past the likes of crowdfunding as a new emerging source of income. And the next forecasted stage of FinTech is 3.5, which will look at the growth of digitization of financial services within the emerging economies. So, what is FinTech? Well, FinTech is the combination of the two words finance and technology. In a systematic literature review in 2016, these were the number of examples of what we now constitute as financial technology. It's essentially applying technology to improve financial activities. As noted before, this really came from the kind of crowdfunding sector, the growth of mobile payments, but then this in turn created what's known as the neobanks, which are banks that don't have a physical location, they're just solely online. Just like in the Northeast, we have something called Atom Bank, which is based in Durham. You may have also heard of the likes of distributed ledger and blockchain technology. This is actually not something that's of a new IT phenomena. It's quite old in the way it operates, but it recently it's made the headlines due to the use of cyber assets, the likes of Bitcoin. Notice I didn't say currency there. This is because the former head of the Bank of England, Mark Carney, doesn't classify these as currencies. And then moving forward, it looks like we're going to see the development of artificial intelligence, certainly to help the advisory sector. So let's have a look at how FinTech has changed the banking landscape in the UK. So this is about 10 years ago. You can see the scale of the banking sector, but really most of your assets, I'm guessing, are in the banks on the left of the screen here. In the early 2000s, we've seen the supermarkets start appearing as the challengers, and this is because the supermarkets realised that they had such a big cash flow, therefore they could do joint ventures with the banks to create their own. So they did take a few customers who were loyal with their supermarkets. I put Nationwide at the bottom there because they're obviously a building society, but from an assets base, they have a very large proportion of customer deposits relative to the medium challengers. Now let's fast forward to the banking landscape to today. This might be an over-exaggeration, but you kind of get the sense of how the landscape has changed with the development of technologies and the introduction of more niche and specialist providers. And again, these niche specialist providers were also as a result of the financial crisis, leaving reputational damage on some of the clearing and challenger banks. So some providers appeared and tried to capitalise on this in the creation of their own organisations. But if we look at the centre left there, we have the formation of these Nairo banks. And some of you watching this video might actually use some of these services, the most popular being Monzo or Revolut. Monzo for its app, Revolut for its international use and low transaction costs when moving money overseas. And we have also seen the transformation in the e-payments sector, where payments are not going through the likes of your clearing banks. People are using these alternatives at the bottom left because of their convenience and lower fees, and in some cases faster payments. But this leads me to one of the first challenges. Despite the change in landscape, I can still bet that most of your assets and wealth are with the clearing banks and the medium challengers. But what's next? It's argued by Bloomberg Intelligence that the next battleground for the banks is actually from the likes of the US tech firms. If you look at the scale of their user numbers compared to the actual users of Nairo banks, you can see how these potential IT tech giants could potentially enter the market and really capture the market using their existing customers and the data they already hold on their customers. And we've already recently seen that with the development of Apple and its credit card, as well as many users around the world using Apple Pay or equivalent. So this is a potential another challenge for the Nairo banks. The fact that your assets are still with the larger banking firms that we're aware of, but then there's other more dominant players in the market that could appear very shortly. But what other challenges do they face? Well, we've already covered the fact that we don't switch bank accounts. If we don't switch bank accounts and put all of our assets within the likes of these Nairo bank providers, then they can't really make money off just providing one service. They can't cross-sell us products because they're rather small and niche in what they actually do. So if we don't put all of our assets with these providers, then they can't generate enough loans to potentially make their business more profitable. Do we trust them? Given that they don't have a physical branch, this will put people off. We've seen recently cyber attacks on the likes of Travelex and Tesco Bank. If we don't have faith in their ability to combat cybercrime, then we're probably more likely to keep our money with the larger banks because we can physically go somewhere to withdraw our cash. There's also issues surrounding financial inclusion, certainly in the older generation. Can they have access to these banks? But also there's new research coming out about the environmental concerns regarding e-finance. The use of Bitcoin and the mining process is causing environmental challenges in the cooling systems of these PCs, and the energy usage in the mining process is also a cause of concern for the likes of the population in Iceland, who have seen their energy costs increase substantially as mining firms for Bitcoin start appearing, as well as in Asian countries where the likes of fossil fuels are used to power these computers, adding to the environmental concerns that already exist. And then from the government and regulatory side, if there's no physical location, who is the jurisdiction that regulates these firms? What data protection laws will these firms be subject to? Will they be subject to the same sort of deposit protection schemes we see that the banks have? Does everybody have access to these firms? Do they have the technology? Certainly in the developing economies, do they have the digital infrastructure in place to allow for the fintech sector to develop and thrive? But lastly, in the capitalist Western society that we live, it is the banking sector that creates the wealth for the economy. Can the fintech sector come in and help to generate additional wealth, or will they take customers away from the typical wealth creators, which could actually have a detrimental impact on the economy? For more information on this topic, I provided a number of recommended textbooks or journal articles for you to have a look at. There's also a number of practitioner-led readings. Because this is a developing area, at the moment there tends to be more practitioner-based literature, but as we see the sector develop, more academic literature will appear. If you'd like to do your own investigation on the size of these banks and the likes of the future challenges from the tech sector, then feel free to go to Bloomberg Intelligence via the Bloomberg terminals. And for additional training, you can view my YouTube channel. Thank you for watching this presentation on the concept of FinTech and the challenges this sector faces moving forward. And I do hope that you will go on to fulfill one of these 70% of jobs in the finance sector that don't exist yet.